So let's jump right into it with Chapter 1. First things first, what is Palladyne's business all about?
Well, they're not building robots themselves. Their focus is on the AI software that makes those robots smarter. They want to make robots more adaptable and autonomous, and a big part of that is requiring way less training than traditional programming.
Okay, wait, back up a sec. Minimal training. Most people think robots are like programmed for every little thing they do. How is this different?
Think of it this way. Traditional robots are like students memorizing a textbook.
Hmm.
They can only do what they've been specifically programmed to do.
Right.
But Palladyne's AI is more like a student that learns through experience. They use real-time data and machine learning to adapt to new situations as they happen.
So less coding, more learning by doing. That
Yeah.
sounds like a huge advantage, especially when things are unpredictable.
Absolutely. It gives them a level of flexibility and responsiveness that you just don't get with traditional robots. And get this, their software works with most robots already out there. It's hardware agnostic.
Wow, so it's like a universal remote for robots. No wonder they're getting so much attention. Speaking of the people behind the scenes, let's move on to Chapter 2, Management Evaluation. What's the story with Palladyne's leadership?
Well, the CEO, Ben Wolf, is relatively new. He came on board just a year ago. But the board members have been around for a while. Their average tenure is over 7 years.
Okay, so you've got a fresh perspective at the top mixed with a lot of experience on the board. Interesting dynamic. What else should investors consider when they're looking at management?
One thing to watch is insider trading activity. It can give you a little peek behind the curtain, you know.
Yeah.
There have been some stock sales recently, but also some big purchases.
So maybe some people are taking profits, but others are still betting on the company? It's like getting mixed signals, right?
Exactly. It's not a clear-cut situation, so investors need to interpret those signals carefully.
Makes sense. So we've got a bit of a mixed bag on the management side, but at the end of the day, the numbers tell the real story. Let's dive into Chapter 3, Financial Health. Paint us a picture. How are Palladyne's financials looking?
Well, they're definitely still in growth mode. That means they're not profitable yet. Their last reported revenue was $871,000, but their operating income was negative $7,299,000.
Okay, so for those of us who aren't financial experts, that means they're spending more than they're making right now. But is that necessarily a bad thing for a company like this?
Not at all. It's pretty common for companies in the R&D stage to have higher expenses. They're investing heavily in innovation and growth, and that costs money. What matters more is how they're managing those expenses and their overall financial stability.
So what are the key things we should be watching?
Well, their current ratio and quick ratio are both strong, above 4. Those ratios measure their ability to pay off their short-term debts. Basically, they have a good cushion of liquid assets, so they're not in danger of running out of cash anytime soon.
That's good to hear.
And their debt-to-equity ratio is pretty low at 0.49. That means they're not overly reliant on borrowed money, which generally makes them less risky.
So financially, they're not in the black web, but the overall picture looks pretty solid. We've unpacked their business model, taken a peek at their leadership, and checked their financial pulse. But how are investors feeling about Palladyne, and who else has skin in this AI game? We'll find out after a quick break. Hit that subscribe button to stay tuned for our deep dive into the world of Palladyne AI. All right, we're back and ready to dig deeper into Palladyne AI. Before the break, we covered their business, leadership, and financials. Now let's tap into the wisdom of the market. It's time for Chapter 4, Market Sentiment.
Yeah, market sentiment. It's like trying to read the room, but the room is full of millions of investors all talking at once.
Exactly. So what's the vibe? Are people excited about Palladyne, or are they hesitant?
Well, there's definitely a lot of buzz, especially when you consider how fast the whole AI robotics market is growing. I mean, just look at AI drone tech. That alone is expected to hit $206 billion by 2033.
Wow, that's a serious amount of potential. But what's driving that growth? Why is everyone so interested in robots all of a sudden?
It's a few things, really. First off, you've got automation happening everywhere. Manufacturing, logistics, healthcare, agriculture robots are stepping in to handle the tough jobs, the dangerous ones, and the super repetitive ones.
So it's not so much about robots replacing humans, but more about them working together, right? Robots doing the things that humans shouldn't have to do.
Exactly. And then you've got edge computing, which is a total game changer for real-time robotics. Instead of waiting for instructions from the cloud, the processing happens right there on the device.
Makes sense. That would make them much faster and more independent.
Right. especially in environments where they might not have a reliable connection. And remember how we talked about Palladyne software being hardware agnostic? That's another big trend that's playing in their favor.
It's like they've got a head start in a race that's only just beginning. But of course, they're not the only ones in the game. Who are their main competitors in the AI robotics space?
Oh, there are some heavy hitters out there. You've got companies like ACI Worldwide, which is already a giant in payment processing, and they're integrating AI into their solutions. And then you have Red Cat Holdings. They're focusing on drones for the defense and military markets.
So Palladyne's up against some serious competition. What sets them apart? What makes their offering unique?
Well, their big focus is on adaptability, and that whole minimal training thing we talked about earlier, their software allows robots to learn and adapt in real time, which makes them a lot more versatile than robots that rely heavily on pre-programmed instructions.
It's like the difference between a robot that can follow a recipe and a robot that can create a whole new dish on the fly, right?
Exactly. It's a big deal. Now, let's shift gears a bit and talk about ownership structure. That's chapter 5. It's always interesting to see who owns a piece of the pie.
Yeah, for sure. It can give you a sense of who's backing the company and what their long-term vision might be. So, who are the major players in Palladyne's ownership structure?
Well, you've got your usual suspects, institutional investors, mutual funds, and individual stakeholders. But there's one name that really stood out to me, Delta Airlines.
Wait, Delta? Like the airline. What are they doing investing in an AI robotics company?
That's the million-dollar question, isn't it? They own about 1.25% of Palladyne, which might not seem like much, but it's definitely unusual for an airline to be dabbling in this kind of technology.
I mean, are they thinking about robots serving drinks on their flights? Or maybe robot pilots?
Okay, maybe not robot pilots just yet, but it does make you wonder what they have in mind. Maybe autonomous baggage handling, drone deliveries, who knows? But it definitely highlights the potential for AI robotics to shake things up in all sorts of industries.
It's exciting to think about all the possibilities. But of course, with potential comes risk. Let's wrap up this section with Chapter 6, Risk Assessment. Time for our trusty SWOT analysis: strengths, weaknesses, opportunities, and threats. What's the breakdown for Palladyne?
All right, let's start with their strengths. They have a cutting-edge technology. That minimal training aspect is huge. Their platform is hardware agnostic, and they're all in on edge computing. Plus, their board members have a ton of experience.
Sounds like they've got a pretty solid foundation. But what about their weaknesses? There have to be some, right?
Well, the most obvious one is that they're not profitable yet. They're still burning through cash to fuel their growth. They also haven't been a public company for very long, which can make some investors a bit nervous. And they rely a lot on strategic partnerships, which adds another layer of complexity and risk.
So it's a classic high-growth, high-risk scenario. What about opportunities? The AI robotics market seems like it's ripe for the picking.
Definitely. The market growth itself is a huge opportunity. As automation keeps spreading, the demand for AI-powered robots is only going to go up. Palladyne could also explore new applications for their technology, maybe even beyond robotics. And acquisitions are always a possibility, which could give them access to new tech or talented people.
Lots of room to grow and innovate. But what about threats? What could potentially rain on Palladyne's parade?
Competition is always a threat. There are big companies like ACI Worldwide and lots of nimble startups all vying for market share. And, technology itself is a double-edged sword. If Palladyne doesn't stay ahead of the curve, their tech could become obsolete pretty quickly.
Yeah, it's a fast-moving industry. What else?
We also have to consider the regulatory landscape. As AI becomes more widespread, governments are going to start implementing new rules, and those rules could impact Palladyne's business. And then there's always the overall economic climate to think about. If there's a downturn, companies might be less willing to invest in new technology, even if it's as promising as AI robotics.
So, lots of potential pitfalls to watch out for. Well, we've covered a lot of ground today. Let's bring it all together for Chapter 7, Conclusion. Is Palladyne AI Corp a surefire bet or a risky gamble?
It's not that simple, honestly. Palladyne is operating in a really exciting market with huge potential, but there are some significant risks as well. It's not a clear-cut buy or sell decision. Investors need to weigh the pros and cons, do their own research, and figure out if Palladyne aligns with their risk tolerance and their investment goals.
Words of wisdom. We always encourage our listeners to dig into the sources we've provided and form their own opinions. And speaking of opinions, remember that interesting connection we teased earlier with Delta Airlines owning a chunk of Palladyne? Well, we're not going to spill all the beans just yet.
That's right. We want you to head over to our Stock Analytics AI YouTube channel to get the full scoop. We'll break down Delta's investment and what it could mean for the future of both AI robotics and air travel.
And while you're there, make sure to hit that subscribe button so you don't miss any of our future deep dives into the world of finance and technology. We've got new episodes coming out every week, packed with insights to help you make smarter investment decisions.
And just a quick reminder, we are not financial advisors, and this is not investment advice. Always do your own research and talk to a qualified professional before making any investment decisions.
But we do love hearing from our listeners. If you have any hot stock tips or interesting insights you want to share, drop them in the comments below.
Until next time, keep learning, keep exploring, and keep diving deep.